In today's video, I thought I'd take a look at energy. I don't normally do videos on energy, but I'll take a look at it today. So we've clearly got a yearly cycle low right here in June. This was the first daily cycle up. This was the first daily cycle correction. This is the point at which, of course, everyone is expecting oil to go back down and make new lows. That's when it catches everybody off guard, and then we start the second daily cycle up. It's still, in my opinion, probably too early for this second daily cycle to top, but it isn't too early for the daily cycle to drop into a half cycle low, something like either this little correction or this one here, and that could give us our cycle trend line. So a reasonable target might be maybe back down to 50 or back down to this pivot at about 50.50, and then another leg higher. So maybe something that looks similar to this. Keep in mind, these aren't exact targets. I'm just taking some guesses here. Maybe we pull back to test this pivot right in here, and then rally, and then that would give us the pivot to draw in our daily cycle trend line, like so. So yesterday I took down my leverage on the ERX trade. We came away with that with a profit. As you'll recall, as the energy stocks were moving into that bottom, there were calls everywhere that people panicking that I needed to sell and get out. I, of course, was never going to listen to that kind of talk. I've said this before that I don't sell into cycle lows, and this was a yearly cycle low. I don't sell into the panic of a yearly cycle low. Ideally we'd like to buy at that point, but we just had so many counter trend moves, and all of them looked convincing. And at some point, that it just became apparent to me that I was never going to be able to call this correctly. All we were going to do is, we would buy once a move started, and then get stopped out once it made a lower low, and we were just gonna, it was just gonna whipsaw us to death. We had, here was one stop out, another one, another 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 stop out. So you can see what would have happened. We would have just gotten stopped out over and over and over. And by the time we got down here and stopped out for the sixth or seventh time, our mental capital would have been deleted. We never would have been able to buy at the bottom. And so there was no chance of us ever producing a winning trade with that strategy. The only strategy, in my opinion, that was going to work was to just realize that we were working our way down into a yearly cycle low. At some point it was going to bottom. The rallies out of yearly cycle lows are the most powerful rallies of the year, and just hang on until that happened, and then we would catch that move up, and our position would be rescued, and probably go back into the green, and we would come away with this trade with a winning trade, instead of just slicing and dicing our energy portfolio to pieces, trying to pick which one of these bounces was actually going to be the yearly cycle low, and then just getting stopped out over and over and over. And in the end, destroying the portfolio and destroying our mental capital to where we wouldn't be able to buy at this bottom anyway. So yesterday we went ahead and we had a profit in this trade. It wasn't a huge profit, but it was a profit, as opposed to just stopping out 7 times in a row and guaranteeing a huge loss. But I am not out of the energy trade. All I did was remove the leverage. So this kind of a doji candle here, kind of a reversal candle, was a signal to me yesterday that maybe it's time to get out of the leverage and just convert back to the unleveraged fund, the XLE, and we'll see if we can, if like I expect, oil pulls back for a few days, gives us a move into a half cycle low, then possibly the XLE, the energy stocks, might pull back, maybe even pull back far enough to test this support zone here at a little over 67, and then that's the point at which I would want to convert back to the ERX position for another leg up. But I don't want to be out of the market just in case I'm wrong and this keeps running. Then it, I've at least got a position in the XLE, so I'm going to at least catch the upside move if I'm wrong and this doesn't turn out to be a temporary top. And if it becomes apparent that I am wrong and this is not going to form a temporary top, then at some point here I'll just convert back to ERX and keep riding it. In the long run, we should still have 1 or 2 months left on this rally. We're only just a little over a month into this, and even if this were to be a bear market rally, which I don't think it is, but even if it was, you would expect the rally to run for at least 2 months and probably 3 months. So we should have plenty of upside still in the energy stocks, but I would like to maximize my leverage positions as much as possible. So if we could get a corrective move, maybe back down to this support level, I would rather take that drawdown in an unleveraged fund, the XLE, and then convert it back to ERX once we get back down to this position, and then I think we'll get another run higher. And ultimately, I think oil is going to rally to at least test this $60 zone right here during this intermediate cycle. So far, while we've been stuck in a range, and I do think we're probably going to remain stuck in a range between 60 and 40 for a while, maybe for several years, but so far the yearly cycle lows are still advancing, the same as gold. This was the 2016 yearly cycle low. This was the 2017 yearly cycle low. You can see this low held well above this one. So the energy market is advancing, but it's just advancing very slowly and probably caught in a trading range between $40 and $60 for quite some time. But I would, my expectation is that this intermediate cycle right here is going to make it to $60, maybe by the middle or end of November or early into December, before we get our next intermediate top, and then another move down into a intermediate cycle low.